Okay, so the video will be recorded. So right now you should see my screen with the levels and an auto trader chart. There's a couple of trades on there, and I'll get into how I made these trades corresponding to the levels in a little bit. But a couple of announcements. So the levels are available. If you don't have the latest version of the auto trader, private message me or email me, and I'll make sure that you get it. We are now on version 50. I just released 48, but we added another indicator to the package called Swing Raise, and it's very similar to what most of you know as supply-demand levels. It plots lines at the swing highs and lows. And John will explain that to you. He's a pretty good expert at the core. So again, I want to introduce John, who's going to talk about the levels, explain the levels. He's got a lot of experience with them. And also, he's a really good trader, and he's going to moderate the trade room. So go ahead, John. I'm going to let you take it over from here.
Okay. Hi, everyone. The BWT started, we wanted to bring a set of indicators or a different way of looking at the market. A lot of you know, or probably surmise or ask the question yourself, while you're trading, why does price run up or run down and then all of a sudden stop in its tracks and reverse or consolidate or whatnot? So in the years of watching the market and understanding the market, actually, and pretty much shying away from the standard indicators, because most of those indicators are either lagging or very complex to actually use. So we took on a different approach and answered the question. The premise was, why does price move the way it does and then it stops? I always say, why does it move and then all of a sudden the anti-lock brakes kick in? And that's using that as a premise to solve the problem. We ended up creating the core level, what you see now. And the way it was also designed based on a very complex math is also giving you points of entries and points of exits as well. So imagine you having targets before the market has even moved throughout the day. And and that's a big game changer, because when you're trading, everybody knows price action, everybody knows pivots, everybody knows how to measure a swing to get support and resistance, but no one really can actually tell you, okay, where is price going to go? Well, the core gives you that way in advance. And when we go into details about it, you'll know this at 9:30, at 10:30, and after the 10:30, that level is locked in for the rest of the day until the European market opens again. I guess the easiest way to look at it, let's break it down into swings, right? Okay. So basically, if you look at...
Good.
Is that better?
Yes.
Okay. So if we're trading, we can always pick at the highs and the lows, but we can never know from this high to this low how far it's going to go down. Obviously, you have a high and then a low and then a lower high, but how do you know how far it's going to go? And also precisely when to get in. So if you're trading a blank chart, it's kind of hard to figure out where price is going to go. So Randy was talking about our swing raise, right? So taking this and then adding the BWT swing raise onto it. So basically what it's doing is finding the highs and the lows and giving you kind of like a support or resistance. It could also be your entry and your exits. For example, if it's coming down to this low and you form higher lows, and then here's your previous swing. Now the swing raise were designed to give you, because the traders in the pit, they don't have sophisticated computers to watch. They just have order-filled laptops or whatever device they have now. So they're actually looking at swing highs and swing low. And that's why the swing levels were created. It's to actually just point out what the pit traders are looking at. because they generate they generate the spread. So if you're aware of where the pit traders are watching, that gives you a target that they're looking at. So you're not going against them, and you're kind of trading with the big. I always call them the big boys, right? Because they manage the market. They control the market. It's not us, because we're trading small amounts of money where they're trading millions. So it's always good to always be on the right side of the trade, right? That's how you become successful in trading. We took a blank chart like such, and then we added the swing. So now you're actually watching what those pit traders are doing, and you want to be with them and not against them. Well, that's what I'm building into, because then, okay, so the next thing we provided was the Globex, which is really what Randy was speaking to. And what the Globex is really, it's monitoring the European Open, the open price, the US Open, and in between is the 8:30. Why is 8:30 so important? 8:30 is where some of the news events happen, right? So news events happens at 8:30, at 10 o'clock, at 1 o'clock, or 2 o'clock. So it's important to keep an eye on those opening prices, because if price supports one of the opens or fail the open, it's actually going to fall below or above. So if you can see here, yellow, and you can change these indicators are customizable in the colors, I believe, Randy.
Yes.
So you can see the European Open price is here. And as long as we maintain above it, we're going to go higher, okay? And the red shaded area is 8:30, and this is where news happens. So you can see it today, this is the 8:30. And as long as we stay above that, we're still going to go higher. So we're using the Globex levels to give you a direction where price is going to head towards. Okay, so now you have a swing to watch the pit, you have the Globex to understand the momentum of the market. So, and as you use these new indicators, you'll start to learn how to correlate between the European Open, the News Open, and the 9:30 Open. So, so now we took a blank chart, we learned where the pit is, and we learned the critical prices where where price is either going to fail or whether price has momentum to go higher or failed to go lower. Okay, so with that, it's still, now you're getting some insight in how to trade the market. So now we created the BWT levels. Okay, and this is what it looks like. I don't know if any of you guys have already loaded this in your on your chart as a test. Now, just to clarify, the levels only work if your PC and NinjaTrader is set for Eastern Standard Time. Okay, and there's a reason for that. I know a lot of people don't want to change their time, but you won't really need to be in sync with the systems that's actually managing the market. And all the main systems are in New York. So, and the market is in New York. So the core works off of that while it's calculating and analyzing all the data that's coming in. So that's very important. Second thing is, if you guys are not in the US and your time and date stamps are in non-US standards, the core will break as well, and you'll get a bunch of fatal errors from NinjaTrader. So if you're loading that and you're getting weird data, always check for make sure your PC is on Eastern Standard Time, and also your date format, currency, and all that in Windows is set to US. And if you do that, the core will work. Okay. So I guess the easiest way to explain this, let me see. Can you guys see this? This line here, okay? You're gonna see two lines, and these are real-time calculating lines. And what it's doing is when the market opens at the European, that's why we look at the European Open, it's taking in all the orders and all the price actions that's happening while we're asleep, okay? And it's constantly crunching numbers until the US Open, which is at 9:30. Once the 9:30, once our market opens, it will turn into this blue line. And that is, as we see, it's the medium, or blue is the midpoint. And the way I see it, the way I usually explain it is, you're looking at blue, and if price is above blue, you tend to go higher. So you're looking for longs. And if it's below blue, you're looking for shorts. Okay. So at 9:30, once it crunches through all those numbers, it's going to give you the range for the day. And the range is from green to red. So your job is really simple now, right? Instead of looking at all these indicators, you're just looking to see price, because price action is going to drive the market. So if price stays above blue, you're looking for longs. And if price is below blue, you're looking for shorts. Now, in between the daily range is, which is green and red, is these lower, mid lowers and these mid highs, okay? And those are very critical in the sense that if prices cannot get above the upper midpoint, there's no way price can get to the green daily range, or neither the medium high or the extreme. And I'll talk about these areas later. But for the way I trade, I don't really look for these runners. It's nice to catch them, and you'll see them run, and I can help you figure out what I call trend days, where we hit these upper ranges. But for the most part, everybody who's trading makes there's plenty of money between midpoint to midpoint, blue to red, or blue to green. You know, I always say, you know, bulls make money, bears make money, pigs get slaughtered, right? So I try to just get these little ranges, whether it's from blue to upper midpoint, or the midpoint to green, and vice versa on the downside. So you'll get this static. So why does the core, you can see in this illustration, the core changes when at 10:30. Well, what happens is, as the engine was calculating all the European Open, it's also calculating all the open orders that are executed at the market price. So that's institutionals, that's mom and dad. I mean, the non-day traders are putting in
Retail orders.
The retail orders are being kicked in. So it's taking all that information and adjusting itself. But once it calculates and absorbs all that retail trading, the static, the core levels will adjust accordingly. Okay. Now there are times when blue lines up or is slightly different, but it all depends on the retail orders that have the open orders that have been triggered. And again, it's the same rules. If we're above blue, we're looking for longs, and if we're below blue, we're looking for shorts. So we've covered the daily range right here from green to red, but what about these shaded areas, right? These are we call hot zones. And what happens is, if price can't get into the hot zone to test the midpoint here, price is going to roll over and fail. And when it fails, it always comes back to blue. And then after blue, it comes back to the hot zone. So these prices are calculated and are very critical price targets. So in order for price to get even higher, it's got to be inside this hot zone and above it to get to the next hot zone and green as your target. Vice versa, comes to the hot zone. If it can't break through the hot zone and the midpoint, there's no chance it's going to get to red. So you have all these data points, or what I call entries and targets, to trade accordingly. And it helps you to be on the right side of the trade as well. Does that make sense? Any feedback, Randy? And
Well, it makes sense to me. I'm the only one that's unmuted here, but everyone.
Yeah.
If
If
you look at the chat window,
or you have questions.
Yeah.
And we'll go into this when we get into the trading room. I'll do a session where we're actually going over and solidifying. So that way, one thing is, in the trading room, we got to be speaking the same language, right? So when we're talking about zones and, you know, price actions and highs and lower highs, we're gonna go over vocabulary. So that way it's crystal clear. But the point is, the beauty of the core levels is now we simplified everything, as Randy wrote in the manual. Simplify in the sense that you just got to keep in mind these core levels are either your targets or your entries. For example, as price comes up to here, if you actually saw that it pivot back up, it's gonna go test blue, right? And you're waiting pretty much to see if blue is supported. If that's the case, your blue price is your entry, and you might get out. Let's say you're trading 2 contracts. What I would typically do is get in, you know, at the test of blue, take 1 contract out at the hot zone to the mid, and then leave the other one as, you know, give it some fade, 2 or 3 ticks below the mid. So that's how I would. That's what I mean by these levels can either be your targets or your entries, and anywhere in between. You can wait until blue is supported by a couple of candles and then buy it, or you can get it right at blue within a couple of ticks. Likewise, when it failed blue here, you see the red candle, that test, you could sell it, and there's your target, the hot zone. And the hardest part about the levels is really, you got to spend the screen time to watch it. And you'll be amazed at how often these targets and entries are hit. Wouldn't you say, Randy?
I'm totally amazed. Hey, John, why don't you show today's chart? Because this is, there's no way we could, you know,
right. Yeah.
pre-plan this, but today's chart was an awesome example of the levels of price bouncing off the levels. It was just really spot on.
Right. Yeah. So once you get the levels, spend some time watching it. Like I said, the hardest part is convincing your mind that it's this easy and how often it hits. I usually spend with new traders, letting them watch it for a couple of weeks, replay, or just sitting there watching it, trading, practicing on a sim. So Randy was saying, let's look at today's market, right? Today's price action. So you can see at 3 a.m. it started calculating, right? And price maintained above blue. So it's going to want to go higher. Here it came down to test blue, right? And once it failed blue, you can see it tried to test blue a couple of times. And so at this point, you're just looking to short it, you know? How far it would go, that's your target here, your bottom swing, or somewhere in between, halfway. But the moment it goes to above blue, you're looking for long. So here's your entry right here. There's a test of blue. And then you can put your trailing stop or whatnot. But let's move forward so this is all European, right? And this is the 830, right? This is the news, but it still maintained blue. It's important to also note that what constitutes a support or a rejection at the core level. It's at the close of the candle. The wick does not count. That's just running some of the stops right here, right? They came and ran some of the stops before they took off. So one important note is it's on the close of the candle, whether above the core or below the core. When we say core, in general, we mean blue, mid, green, and vice versa, down to the downside. So as the news event happens, so you can see from the European, it's been pretty stable, and then all of a sudden the news, and then it takes into account for all the news, and by 9:30, you get a static blue. You also notice this blue right here. This is actually taking into account when the market opens, and so this is calculating all of this to create blue. This is starting to add on this price action movement until 10 o'clock. That's why you see the adjustments in real time of the core level. And after 10:30, it's static. for the rest of the day. Okay, so you can actually work on those price. So let's see if I scroll. There you go. So if we scroll, my other screen isn't working. So again, I was saying this is the 9:30 open. You get your static blue, and this is your 10:30 blue calculating in real time until 10:30 occurs. So this blue is taking into account for all the action here. And once that happens, you can see it's static for the rest of the day. Okay. And what John was saying is, I mean, what Randy was saying, it's a perfect test of every core level. So, you know, coming to 1150, it stopped right at the red, right? I mean, a green, sorry, as the max high. And if you look at the previous chart, how would you know that? So it stopped at green, and then price started to reverse back. So you knew all of that. You knew green way back here. So you knew your targets before it happened. Okay. Once we failed green, we're coming back to the midpoint, to blue, to the lower midpoint, to red, and these are the extremes, the extensions. The way you and you can see it hits it right to the tick. Can it go over a little bit? Absolutely. I mean, that's just price momentum. But the key point is you have your daily range where you can make a substantial amount, or you could use this to replace your income. And that's what I do. The other thing I wanted to mention in the core is everything here has a pair. Okay. Blue is your starting point. So if it can't get above the midpoint, it's going to come down to the lower midpoint. And that the core is actually, if you think about it, it's designed to give you 85% win rate. So if you just follow the, let's say, really simple, stupid, if you just buy blue and have your targets at the core level, you're going to win 85% of the time. Okay. So there are statistics that we collected and been able to validate, and that is if price gets above blue, you have an 85% odds of getting to green, and you can see that happen. And this will happen day in and day out. So you have to think of it two ways, right? Your core is your entry and your exits, but also memorizing or understanding the odds of each of the core. Just like I mentioned, blue to upper midpoint. No, keeping that in mind and understand how price tests the core, I guarantee you.
All right, that was a great presentation. John, thank you. I know you guys are going to have some questions, but there was a couple of things I wanted to mention about the core is your knowledge of price action will help you seeing setups that occur within the core levels, such as, you know, pretty standard price action stuff like a failure here, and then a low, a high, and then lower. This is a classic ABC move. There's actually a smaller one. You know, there's like a high, a low, a high, a low, a double top, and then lower down to blue, and then there's some choppiness here, and then another low, a high, a lower high, a lower low, a lower high, and then lower again, and then that continued all the way down to the extended level. So again, price action will help you. When I'm using the auto trader and the core and the BWT trend indicators, this is just kind of what I've learned from using the core levels is I use a 1-minute chart for guidance, and the BWT trend bars can also give you some guidance for direction. It's important to learn the principles of, you know, why prices bounce off these levels, but interpreting price action will help you, and that's kind of what I use when I engage the auto trader. So, for example, this trade was late in the day, and you can see I started trading here at 15:30, and 15:30 on the chart is right here where it came to the lower midpoint. Okay, we had a low for the day, it was at the market extremes, and we had a series of higher lows, and it came to the midpoint. And this is 1525 bar, and then there was kind of some sideways action here, and right at so actually went short here because there's a short right here because I thought it was going to break through this and come back down and test the low. And what happened is I got a higher low right here, and it chopped around here like this. And then when I took, so I kind of stood back and watched, and on this trade right here, the time is 15:31. And this is 15:31, right about the end of the choppiness right here. And if you notice my order here is I put a trend line here at 17,605. And if we look at 17,0605 on the chart, it's basically right above this action here. So this is like pretty classic, you know, kind of a ascending triangle to the upside. That's essentially what this is right here. So I use this kind of stuff in my trading, and this helps me. So this is right where I entered a horizontal trend line right above this, and the market popped right here, and very quickly trail stopped. I was clicking my trailing stops. I made another long up here, quickly got out, and then right here at the very end, this was the high at 1536, which was right here on this bar. This was the high at the London Open, is where it tested right here. And that was it. And again, using the horizontal trend line to get extra contracts in there, I ended up with 715 on this chart. But this is just one way to use the core and guidance from, you know, being able to read price action. And I know this is easier said than done, but the manual right now is pretty simple, but I do want to add to that manual and include some notes on reading price action and chart setups like this, because I think that'll help you guys to determine direction. But what we were saying before is today was just an outstanding example of prices bouncing off the levels, and the Globex levels very much in play today. You can see them providing support and resistance, but yeah, the the way price intersects with the core levels, and the fact that the core levels recalculate after the first hour is just brilliant. And I'm really enjoying using them, and I'm hoping with the trade room, you guys will see more examples of this in live trading, really put these things to use.
Yeah, so Randy, if I may add, yeah, in the trading room, we're going to go over all price actions and core levels, and I tend to have after-hour sessions or early sessions to recap and have everybody be able to chit-chat and ask questions, and then when trading starts, then everybody's on mute, and then I'll walk you guys through it to see what I'm seeing. And over time, you'll actually right, it's learning through osmosis, right? The more you hear of it, and the more it sticks into your mind. And we have a whole team. It's not just me. There's a bunch of other guys who trade the NQ, the ES, the CL, this GC. So different instruments that they're experts in that they trade. So it'll come naturally after a while. And again, we want everybody to succeed. So definitely we'll have different breakout sessions and questions and answers and what if you have any. We're here to support you in any way we can.
Anybody have any questions? Yep, it would be a great addition and we will be bringing it. Okay, so a note about my indicator on the bottom here. This is the BWT tick extremes. In order to see the tick on your chart, you have to subscribe to the indices from your data provider. Even Apex, you can upgrade your data feed, but you have to subscribe to the indices in order to see the tick. It doesn't come with NinjaTrader, but I've been a tape reader for a long time, and I like looking at the tick and the advancers and decliners and things like that. So I had a video where I showed, how to use divergences in the tick. It's often very good, but very often you'll see this is the tick for the S&P, but it pretty much tracks with the NASDAQ. And I mean, right here, there's a divergence. There's a low in the tick and a higher low on price. And then right here, there is a higher low on the tick, but a lower low on price. And sure enough, the market went up from here into the close. But there's tons of examples of that on the tick. But when you get to watch this close enough, you'll see these tick extremes often mark an exhaustion in price. So I find them useful.
Yeah, when price hits that extreme violet core line, it won't go much further than that. Price has to be balanced back up with the control systems.
I noticed also, I think you said something about this, John, was that when price goes to the extended level, like it did here today, that we often have a rally the next day. Often market trades in the opposite direction. Is that right?
Not necessarily, but there's a high probability. I would say 30% of the time. It all depends on if you look at market dynamics from previous days. If the guys are there to, what do? They run the stops, right? So if it hits the extreme, the system has to balance back out and close between the lower extreme, the lower midpoint, or red. And then what we'll do is analyze overnight to look at where the market dynamics are on the left. And if they ran out of the stops, then it shoots right back up to find the balance. So it all depends, right? And we'll do all that in the trading room too. So, but the point is, once it hits the extremes, price has to balance back out. Or else you get, the crash from 2007, right?
All right, couple more questions here. ETA for the trade room. As soon as we can work out the details, it'll be a Zoom meeting, and there will be a monthly charge for it. I think it's gonna be about $99 a month. So yeah, there is gonna be a charge for the trade room. There is plan to add the core levels to the auto trader. We're working on it right now. It's a little bit more of a challenge than we thought it would be, but we're pretty confident that we will be able to bring it into the auto trader as a signal. All right, I think it was a good webinar today. I'm going to wrap it up if there's no more questions. Anything else you want to add before we
No,
sign off, John?
Yeah, I was going to comment on Daniel. He's right. There is a 3-day cycle, so we're working on putting that for you guys as well.
Okay, everyone. Thanks for attending today. The meeting is recorded, and I'll post it in a day or two. Thanks, guys.
Thanks.